Hi guys, this is Kurve-Karande and I welcome you all to my channel all about finance. In previous video, we tried to understand the history and the journey of stock market. Today, we are going to learn about the stocks and what is a stock exchange. Also, we are going to discuss what is NSE and BSE, which are the major two stock exchanges in India. And we are also going to understand the index which is related with NSE and BSE, and then we will try to dig down the difference between the primary market and the secondary market. We'll also have a look at SEBI and its functions or roles. Then at the end, I will show you a website which is very useful for stock picking or for stock trading. So please stay tuned with me till the end of the video. By definition, a stock is a share in the ownership of a public limited company. Suppose if I am a company and you are the shareholders, I want to borrow money from you to raise my capital to flourish my business or to expand my business. And you, being the shareholder, want to gain a tiny portion of my company. So you will give me money or you will lend me money and I will borrow it from you. In this way, shareholders will get ownership in my business. So, stock is not limited only to a piece of paper. If you are buying a stock of any company, it means that you are becoming a part of the business. You are buying the business. So, don't limit your concept of stock only to a piece of paper. You are not just buying a piece of paper or a certificate, but you are buying the business of that particular company or that particular firm. So in this way, a public limited company borrows capital from the shareholder, and in turn the shareholder gets the ownership in the company. This term share, stock and equity are used interchangeably. So I hope that now you are very much clear with the term stock, which is nothing but the share in the ownership of a public limited company. This is how a typical share certificate used to look in early days. But now with change in technology, they are kept in digital form, also known as dematerialized form. Now you don't have to hold a physical share certificate. They are kept with your brokerage firm in dematerialized form. I have taken this screenshot so that you can understand or you can visualize how share certificate used to look in early days. By now, we know what is a stock. Let's try to understand what is a stock exchange. A company needs to borrow money and the investor wants to lend money. So, how they both will approach each other? There should be some common platform or a common place so that a company and investor can come together and interact with each other. So, stock exchange provides a platform, or it channelizes the system in such a manner that company will list itself onto the stock exchange and will issue the shares of its company or of its business to the general public, and the general public can come here and trade the securities, or they can buy and sell securities through the help of stock exchange. By this way, funding is channelized through a systematic manner, and it also gives a pan India presence. That means throughout India. It can trade throughout India with the help of stock exchange. So, stock exchange is a place where you can buy and sell securities, or where you can trade your securities or equities. Apart from this, stock exchange also gives membership to the broker. We can't directly go in the stock exchange and trade securities. We need a platform, or it is channelized with the help of the broker that we can trade securities. So these brokers are the members of stock exchange, and with the help of this broker, we can buy and sell securities. The stock exchange also helps the company from listing and delisting itself onto the stock exchange. They also monitor the transaction of brokers and sub-brokers. It also protects the interest of investors, which help to create a healthy environment in the stock market. By carrying out all this function, a stock exchange helps us to boost the confidence amongst the investors as well as amongst the companies. In India, we have two stock exchanges. One is the NSE and other is the BSE. NSE is National Stock Exchange and BSE is Bombay Stock Exchange. Both are established in Bombay or Mumbai itself. BSE is the oldest stock exchange which was established in the year 1875 under the leadership of Mr. Premchand Roychand. When they started only with 6 brokers and they used to work under a banyan tree. But gradually with time, the number of brokers increased and then they shifted themselves at Dalal Street. The major index of BSE is Sensex, which comprises of top 30 companies. Index helps us to give us the idea that how the market is performing. BSE comprises of more than 5,000 companies. That means more than 5,000 companies are listed on BSE. BSE was the oldest as well as the very first stock exchange of India. NSE. Now, this NSE is the biggest stock exchange in India and was established in the year 1992 under the leadership of Mr. Vikram Limai. The major index of NSE is Nifty, which comprises of 50 companies. More than 1,600 companies are listed on NSE. NSE was the first fully automated system which led to the removal of paper-based system. Also, a single company can list itself on both the exchange. That means same company can list itself on NSE as well as list itself on BSE. For example, companies like HUL, Nestle, Britannia, all these companies are listed on both the exchanges. That is, they are listed on NSE as well as they are listed on BSE. So this was all about the stock exchanges of India. Now let's try to understand what is an index. An index is a tool to measure the change in the market. That means it gives us the idea about the performance of the market. It gives us an idea of the overall market. It helps us to track the market. See, more than 5,000 companies are listed on stock exchange. So it is very difficult for us to track each and every stock. Even if we take 100 stock out of those 5,000 stocks, still it's very difficult for us to track the performance of the whole or the overall market. So in order to overcome this, we came up with an index which is a measuring tool which helps us to measure the performance of the market. Sensex is the major index of BSE and Nifty is the major index of NSE. So in Sensex, we take an average of top 30 companies which are listed on BSE, and based on the performance of this top 30 companies, we judge the overall performance of the market. That means we get a summary of the market. It serves as a benchmark for the whole market. If the Sensex is, if we say that the Sensex has gone up, that means the overall market or the majority of the stocks in the market have gone up. If we say that the Sensex or the Nifty has gone down, which means that the majority of the stocks has gone down or the overall market performance is down. So thus index helps us to measure the performance of the whole market. It serves as a benchmark for the entire market. Now let's try to understand what is a primary market and what is a secondary market. Where IPO is the process in which a company issues the shares to the general public for the very first time. In this way, the company raises money and investors gets the shares. So when the company is coming for the very first time in the market and selling its or issuing its shares, that market is known as the primary market. That we can also say that a primary market is a new issue market. That means a company is coming for issuing its shares for the very first time, and this is done in the primary market. Here there is an interaction only between the company and the investor, whereas in secondary market the interaction is amongst the investor. That means the security is traded amongst the investors, and this selling of security from one investor to the another investor is done in secondary market. These investors can be retail investors like you and me, or there can be institutional investors like mutual fund houses, banks, insurance companies, etc. So the main difference between primary market and secondary market is that in primary market, the company is issuing its shares for the very first time, whereas in secondary market, the share or the stock which has been already listed on the stock market is traded amongst the investors. Now, what is the advantage of this market? See, after the stock has been listed on the stock market, in the stock exchange, the price of the stock can appreciate or it can go down further. But what if the value of your stock or the price of your stock goes up? This will give an advantage of value appreciation to the investors. And if the value or the price of the stock appreciates, then indirectly it will be transferred to the company also. That means by the increase in the value of the stock, the value of the company will also appreciate. So this will give an advantage to both the company as well as the investors. In primary market, the price or the stock value is decided by the company. That means the company sets the share price and it's fixed. Whereas in secondary market, company can't control the share prices. Now the prices of the stock depends upon the demand and supply of the market. That means it is completely dependent upon the market forces. So in secondary market, it's very difficult to control the prices of the stock. So this was all about primary and secondary market. Primary market is the new issue of the security, whereas secondary market is the market where the shares are traded amongst the investors themselves. Because of increasing corruption and fraudulent activities like price fixing, unofficial private placement, violation of rules of stock exchange, also insider trading, Government of India realized that there is a need to stop this activity, and this activity can be stopped by formulating a regulator or establishing a body which will look into the activities of stock exchange. So government in 1992 came up with an organization known as SEBI, which is Security Exchange Board of India. So this SEBI is basically involved in protecting the interest of investors. They are also involved in monitoring the activities of brokers and sub-brokers. They also have the power of investigation, which means that they can inspect the books or the records of all the financial intermediaries. They also have the right to approve laws for stock exchange. So, with the formulation of this body, it gave an atmosphere of confidence in amongst the investor. It also gave a healthy environment for all the intermediaries who are involved in or working in stock market, and thus boosted the confidence of investors. I'm going to show you a website which is very useful for trading, and this is Money Control. So Money Control is the website which is run by CNBC. Though this website is full of advertisements, but this is very informative and easy to handle. See, here you can see a search bar. Here I will try to search for HUL. So I have got the data for HUL. See, this 2154.45 is the LTP of HUL. LTP means last traded price. That means the price at which the stock traded for the very last time. That means it was around 330. You can also observe that the price of HUL, the same stock, is different on NSE and BSE. On BSE, it's 2154.45, whereas on NSE, it's 2154.20. Though there's very slight difference, but the difference is because of demand and supply for this particular stock on two different exchanges. Okay, and here you can see the previous close. It was the LTP of this stock was 2174.05, and today it's 2154.45. So we can say that the stock have shown a downward movement in the price, and if we calculate the difference between the two, it comes around 19.60. So here we get an idea that the stock have gone downward by 19.60 rupees, and if we calculate this in term of percentage, so the stock have gone down by 0.90%. Here we can see the volume, which gives us the idea that how much quantities of the shares or the stock was traded days. See, here you can see that today the stock opened at 2180 but closed at 2154. This is today's high and low. That means today it showed a low of this amount and it showed a high of this. 52 week high and low. This is 1 year's low and 1 year's high. That means it reached up to a level of 1660 in 1 year and a high of 2614 in 1 year. Also, L upon U price band means lower and upper circuit. These are the bands between which the stock prices will move. Thus, we can get a fair idea about how the stock traded, and here we can also see different tabs about the strength, weakness, opportunity, and threats of this company. Here we have different tabs where we can get the financial reports, annual reports, shareholding patterns, peers, etc. for this company. We are going to dig down this website in our upcoming videos, but by that time you should have an idea how this website looks, and we can visualize that how the stock price moves within a day. So let's quickly try to recap what we have discussed today. We discussed about what is a stock and what is a stock exchange. Then we distinguished between a primary market and a secondary market, in which we learned that primary market is a market for the introduction of new shares or new securities, whereas the secondary market is a market where already existing securities are traded amongst the investors. Then we discussed about NSE and BSE, which are the two major stock exchanges of India. And the major index of NSE is Nifty and that of BSE is Sensex. We also tried to understand the roles and duties of SEBI and how it helps to create a healthy environment amongst the investor. And then at the end, we also saw money control website and how it is useful for a trader to pick a stock or to do a stock trading. So I think that you have understood what we discussed today. Till then, see you. Bye bye. Stay home. Stay safe.